Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today I want to talk about the housing market because a lot of people are talking about, oh, I'm scared. Oh, it's going to be the next 2008. Like, what's going on? Numbers are down. Interest rates are going up. Tweets are coming out all over the place. Are we in a recession? Are we not in a recession? Like, what's going on? I don't know. So we're going to talk about it in this video today. But before we get into it, make sure you spam the like button, also sub down below for more content like this, because on this channel we do a lot of just investing money and how to really move your money around in these markets and in these conditions. So without further ado, let's get into it. So the first thing I want to talk about is the current housing market, like what is going on. So right now, 2022, we're basically at a peak. Like, it's coming down a little bit, but we're basically at a peak of housing. The beginning of 2022, everything was going crazy. And I'm very familiar with this because I was trying to buy, still am, trying to buy a rental property. My goal was to buy at least one or two rental properties in 2022. Kind of slowed that down a little bit just based on how the market's performing. In the beginning, January, February, houses were flying off the market. I would get a call from my agent Friday morning. By Saturday, the house was already sold. And it was just a lot of crazy stuff like that. So maybe a house is going for 200,000 or so, asking price. By the end of the day, it has 50 bids on it, and it's over what 50,000 the asking price, and they made a killing on the house. That's what was going on in 2022, and also 2021. It was crazy like that as well. But we are starting to see a shift right now. When I called my agent up, like I went to look at a property like a week ago, I think it was last weekend or so, and went to the property. They were asking like 250 for it, and I was like, nah, the numbers aren't going to work for me. I'm not really feeling this property. It just wasn't exactly what I wanted out of a rental property. And looking at the property now, it's still sitting on the market. The asking price went down a little bit. So you're thinking, whoa, this is the market is starting to shift a little bit. And there's a lot of reasons for that going on currently. The first thing is the Fed. The Federal Reserve is increasing interest rates. We were at zero interest rates. Now we're at 2.5% on interest rates. Every month they've increased interest rates by about 75 basis points. We've had a couple of 50 basis points hikes, but it looks like we're doing 75. And in September, we're kind of in limbo in a sense. Jerome Powell is saying that we're going to play it by ear, see how inflation performs. So we probably won't get another 75-point basis hike. And I don't really bet on it. I think really we're going to have a reversal come the end of this year, and they'll probably just slowly increase rates until the end of the year. So let's say maybe they do a 25 basis point in August, September, like around that time, maybe another 50 October, November, or something like that. So I don't see a lot of increases coming, but I do think it's going to increase a little bit, and then we'll get to a point where it starts to reverse. And the market is also showing that as well. The market is anticipating a rate drop 2023, the first quarter. So we'll see how that plays out. But it's a lot of things that we're seeing numbers wise that would show that would play out. So we got the GDP numbers. We are officially in a recession, quote unquote. The White House really doesn't want to say it. Biden doesn't want to say it. The Federal Reserve doesn't want to say it. Janet Yellen doesn't want to say it. Everybody's kind of like, shh, we're not officially in a recession, but we're kind of in a recession. It doesn't fit the technical terms or whatever. They're changing all the topics up. We don't know. But by the official definition, we are in a recession. So based on that, we're going to see how the Fed plays out. Are they going to continue to try to fight inflation, or are they going to try to fight the recession? They can't do both. They got to pick and choose which one they're going to do. And there's a couple of reasons that I think they will reverse. So 2008, we're seeing a lot of similarities with 2008. And a lot of people are coming out and saying, yeah, this is bad. Right now, we are seeing a lot of refinances not occur. So, refinance, what is refinancing? This is when you get a house, right? You buy a house, and when you purchase it, your interest rate, let's say, is 5%. It's currently 5%. And then last year, interest rates were down to like 2%. So if you were to refinance your house, you could get a lowest interest rate on your house, and you would be paying less back to the bank. So that's a win for buyers because they're able to pay less on their mortgage, saves them a little money on their monthly payment, and it's a win-win. But currently, nobody wants to refinance anymore because interest rates have gone up. Mortgage rates are about 5, 6%, depending on where you go. I know at my bank it's around 5.3% or something like that, but 5, 6% is now the average for mortgage rate. So nobody wants to refinance anymore. If you got a bottom price of 2% on your interest rate, you're looking good right now. You're sitting pretty, and there's no reason to refinance. So that makes sense. But it's causing issues for the people that are in that business, that are people that are in the mortgage business, people that are in the banking business. They're not able to make money on the refinance process or the mortgage process because people don't want to buy houses anymore. They're sitting on the market a little bit more, and people don't want to refinance their homes. So what are we seeing? We're seeing a lot of layoffs. We're seeing a lot of people say, okay, I don't need to go to the bank anymore. I'm good. I don't need a loan officer. I don't need a refinance person to assist me anymore. And that's causing layoffs. And layoffs are one of the things that the Biden administration, the White House is saying that we're not in a recession because we haven't seen the layoffs yet. But layoffs are starting to come. We're starting to see layoffs. We're seeing Target start to lay people off. We're seeing Walmart start to lay people off. With how the mortgage industry is going, the transfer, how it's switching slowly to a buyer's market. It's not going to be an overnight process. That's not how the real estate market works. It's not like stocks where it switches on a dime and tomorrow we're in a bear market. The real estate market is very slow. It's a slow process. It's not liquid, so people can't just immediately sell their house. They can't immediately buy their house. But as you can see, it's making a slight turn into a buyer's market where sellers aren't getting the price they're asking for. Buyers are able to negotiate a little bit more and take a little time and say, okay, I want to sit on this and think about this for a day or two. Do I like this price? Do I like this house? They're not rushing to get the latest house anymore. So what does that mean for you? 2022, 2023, end of 2022, 2023, we're probably going to see a downturn in the market. We are starting to see that now. I know currently in my market, I'm starting to see a little bit of decrease on homes, but 2023, we're probably going to get a nice little downturn on a house where you can start to get houses for 20% off, 30% off. And I'm recommending, for me, what I'm doing, we're not supposed to recommend things, but for me, what I'm doing, I'm sitting on cash. I'm saving heavy because I think I may be able to get a couple of houses that today may cost me 250, 300 grand. I may be able to get them for a little less than that. So sitting on cash and waiting for that opportunity to occur is going to be in a great situation. And it's weird that a lot of people aren't noticing this. Nobody's really talking about this. Nobody notices we're in a recession. The White House isn't saying it. That's probably why people are so comfortable, because they're not seeing the labor market really turn. And the labor market is going to be one of those delayed reactions. It's after the recession takes place. Because if you're not selling homes anymore, you're not just going to immediately get rid of your employees. You're going to take some time. You're like, hey, maybe the market's coming back. Or you can give it a little time. Yes, the economy is slowing a little bit, but you're not going to immediately fire your employees. It's after the market slows down, after you're not making money, after you're not seeing the revenue that you used to see. Then you start laying people off. You start thinking maybe Q3, Q4, I'll start laying people off. So that is a delayed reaction. So yes, we are in a recession. Yes, I do think it's best to save money right now. Are we going to be seeing the next 2008? Maybe we might see it. A big guy, Michael Burry, talked about that. He's been tweeting a lot. He was the one that called the 2008 recession in The Big Short. and he's predicting it again. He's saying about 50% declines, which would be wonderful for me. I'm going to be really excited if we do get 50% decline. But to see that, how the housing market is turning out, is going to be crazy. But I'm curious to know what you are doing about this. Are you sitting in cash right now? Are you still investing heavily? Are you in the stock market right now? Are you hopping in crypto? What's the game plan for this 2022 recession, where housing is slowing down and we're not seeing the moves that we used to see? It's definitely a shift, and we're going to see how that shift plays out over the next 18, 2 years, how that really plays out. And it's going to be really exciting, because that's where millionaires are made. Millionaires are not made in this booming economy. It's made when everything crashes, you're getting discounts on everything, and you can really make a lot of money. So time to get ready and get excited. But that's going to wrap it up for the video today. It's me, boy. Blessed applesauce. Stay blessed. I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything